Is Robinhood democratizing trading or just another billionaire scheme carefully designed to pick the pocket of the very people that can least afford it?
Remember when greed was good? When you had to look the part? When you had to pay for a seat at the table? We set out to change it, the way the system works, to put the power in everyone's hands, to make it feel, speak, sound, and look just like you. We all invest every day in ourselves, our communities, our future. We are all investors.
The name of the company is Robinhood, steal from the rich, give to the poor, and they did the exact opposite. They stole from the poor and gave back to the rich.
Welcome to the Money Growth Academy. My name is Dee, and man, we got a lot to unpack in just a few short minutes. So let's get to it. Now, this Robinhood thing is unwinding very quickly.
Make a very difficult decision to protect our customers and our firm.
Why?
But we in no way
why? Explain why you had to do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Well, I know that there's rumors around that we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
I unequivocally don't believe what he just said, Vlad. I think he's lying about that. There's just no rational explanation on why they would do what they did without outside pressure, interference. They had to know what they did was against all their clients. Their clients were the ones who were making money, and they basically cratered the stock on purpose. So I just don't believe anything that guy says.
Have you seen the Robinhood customer review page? It will blow your mind. Make sure you take a look at that. There's an old banker's joke I like. One banker said to the other, "Why do you keep coming up with all of these new ways to lose money when the old ways work just fine?" Well, this is a tale that has been unfortunately experienced by so many Americans. Make sure you smash that like button right below. Oh yeah, subscribe. Smash that like button to stay up on the latest financial news and recaps and stock analysis. Now, the storybook tale of Robinhood, who stole from the rich and gave to the poor, is, well, it's a morally pleasing story. A man for the people. But it is just a story. Then came Robinhood, the stock brokerage firm. Then came on the scene with the promise to democratize trading. Remember the Robinhood tweet back in 2016? Let the people trade. It turns out it was not so much a revolution, but more of an evolution in trading stocks. It captivated the young and the uninitiated to its near bare bones trading platform, now valued at $11 billion. It ushered in a world of low-cost trades and lowering of the barrier to market entry with no account minimums. Just the right recipe for youth with more guts than money. A whole new world, the birth of the micro-investor market. A move that forced the larger legacy brokerage houses to lower their commission fees and reduce their minimum entry amount for new investors to compete for. Although Robinhood advertises free trades, the reality is free cheese is only found in mousetraps. It actually generates income through a process called payment for order flow. What that means is that every time a person transacts a trade on Robinhood, Robinhood sends that trade to a third party referred to sometimes as principal trading firms or high frequency traders or electronic market makers with the ability to leverage thousands of orders simultaneously for a slight financial advantage. And then Robinhood gets a little bit of a kickback. These lack of disclosures in regards to Robinhood's payment for order flow got them a $1.25 million fine by brokerage industry regulators in 2019. It landed them on a multi-million-dollar lawsuit, which was just recently settled back in December, and they are now targeted with a federal class action lawsuit in San Francisco's court. With that said, let's just talk about the statement released by Robinhood in lieu of the recent trading frenzy regarding people with Robinhood accounts buying stocks shorted by large Wall Street firms on Thursday. Amid this week's extraordinary circumstances in the market, they said, we made a tough decision today to temporarily limit buying for certain securities. As a brokerage firm, we have many financial requirements, including SEC net capital obligations and clearinghouse deposits. Some of these requirements fluctuate based on volatility in the markets and can be substantial, in the current environment. These requirements exist to protect investors and the markets and to take our responsibilities to comply with them seriously, including through the measures we have taken today.
The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements. And
the SEC hasn't said you had to do this.
The question I have is, was Robinhood's recent action of temporarily limiting buying of these potentially shorted stocks based on their concern for meeting SEC net capital obligations and clearinghouse deposits, or some other reason?
It's well known that Citadel and gave money to Melvin, who shorted GameStop, and then you have Citadel, who's involved with Robinhood, and there's a lot of very interesting things, but essentially it appears, from my point of view, that by cratering these stocks, they allowed these hedge funds to get out of their shorts. So that's what it looks like happened. And, you know, these people can go in front and say things that if you are logically thinking about what they're saying, Vlad and others, they don't make sense. They just don't. It seems like we're being fed lines, and I just don't believe it.
Is there a cozy relationship between Robinhood and some of these principal traded firms that possibly swayed their decision to disallow trading for certain periods to depress the stock price for some of these guys for a certain period of time? Look, I don't know, but I guess we'll find out during a possible congressional hearing. But don't hold your breath on that congressional hearing too soon. Congress can't even agree on dispersing more realistic and much needed stimulus checks. Now, remind you, this statement is coming from a company that allegedly intentionally hid or cloaked the language of its FAQ section regarding how Robinhood got paid, for which one lawsuit I just mentioned was settled. Yet, we are supposed to believe their decision was compliance-based. It was the people that made Robinhood rich. Well, it's the people that can make them poor. I got up this morning to check to see if my broker, Fidelity, would prevent me from trading on the same stocks that Robinhood forbid, and guess what? I could trade them if I wanted to. So, my next question is the market really a free market, or is it just freer based on the amount of wealth you own?
I ask this a lot. You know, how many times when the hedge funds are making millions of dollars, billions of dollars, there's an article that I saw Citadel make $6.7 billion on volatility of the stock market. How often do they stop it and say, hold on? No, it never happens that way. This is the first time I can ever remember where you could only sell a stock, you couldn't buy it. If they were that concerned, they should have froze it, and you can't sell or buy. And if people want to liquidate at the price they had the stock, that's fair. But to crater it, and again, in the history of the stock market, don't ever hear the rich guys, the institutional firms, the hedge funds saying, hold on, we're making too much money. You better protect us in case it goes the other way. This seemed like it was just the little guy was winning and the rules changed on the fly.
Why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Well, none of that had anything to do with our decision to do this. Again, this was just looking at regulatory requirements, financial requirements, and we 100% will always protect our customers, where the entire business is operating to empower individual investors and has been since its founding. And that's what Robinhood is committed to continue to do. So we don't want to restrict buying in these 13 stocks. We're doing the best we can to re-enable it as long as it's operationally and and prudent from a deposit standpoint.
All of a sudden, Thursday morning, some Americans woke up, and guess what? They found out the market was a little less free. One person on comment defined capitalism as an economy controlled by whoever already has most of the capital, not free markets. What's your assessment? Are we all participating in a free market where Adam Smith's invisible hand moves about indiscriminately? Let us know below in the comments. Another commenter wrote, when poor people lose money, poor people are irresponsible. But when rich people lose money, the poor people are responsible. Today, America woke up to a reality that so many others always knew long before outside this market and are now coming face to face with it today. And you know what? They don't like what they see. I find it interesting as you listen to the talking heads on CNBC, Bloomberg, institutional traders, and all the so-called experts are all looking to blame the retail trader as if they are the problem. Well, remember Bill Ackman, the billionaire CEO of Pershing Holdings? Hell is coming, gloom and doom speech on CNBC at the beginning of the pandemic.
The husband resources to draw down their credit lines because hell is coming. Okay. And I felt, it's really, I've never had this experience before in my life. The closest I had was the financial crisis where I'm saying, things are coming, bad stuff's coming. But this was a feeling like I've never had. Like there's a tsunami coming, right? The tsunami's coming in. You feel it in the air, right? The tide starts to roll out, okay? And on the beach, people are playing and having fun like there's nothing going on. And that is the feeling I've had for the last 2 months.
Used to push the Hilton shares down, making it a perfect short seller opportunity for him, netting him about $1.3 billion. No one angry, no calls for regulations. They're calling out the retail trader when all along they rarely speak negatively of the despicable behavior of these hedge fund managers and large institutional buyers that engage in this behavior frequently of short selling. But the talking heads are all calling for more regulation. Get this. The very people that espouse all the we want smaller government, less regulation, free market mantra, blah, 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 BS, now want more regulations. But not on Wall Street's despicable behavior that led to this, but to regulate the retail trader willing to play the other side of the stock trade, which all traders are aware of this risk is involved when they buy a stock. Short selling is short-sighted and benefits no one. It churns and burns companies. But when Wall Street gets burned, then we need more rules and more laws. One thing is for sure, this week's activities with GameStop and retail traders has demonstrated to the people worldwide that power still belongs to the people. I hope this lesson learned through GameStop helps everyone understand better that the war has really never been against left versus right. It's about left and right against elite power brokers and their influence. This could not be more evident than when you have the likes of AOC and Ted Cruz tweeting their individual displeasure with Robinhood suspending trading on particular stocks throughout the day. Remember, nothing's free. See you next time.